Good morning, everyone, and welcome to our sixth webinar in our free 10-part educational series for the year, Bookkeeping Fundamentals and More for 2020 Vision. Today's presentation is on business structures, and they're super important, and really looking forward to hearing from our trusted advisor, Sarah. Lady needs not much introduction. She's a whiz, and Trinity Bookkeeping Services is our go-to. Sarah, welcome.
Thanks, Jo. Thank you for being part of this webinar series, and I'm really excited every month when it's time to educate and teach about different subjects and topics that affect our business and our bookkeeping. Okay, so we're going to jump straight into it today, and I'd like to just introduce the topic of business structure and talk to you just a quick overview of what we'll be looking at. So we'll be looking at sole trader, company, and trusts. And there are other forms of business structure, for example, partnership and so forth, we won't be looking into. But these are the three main areas that I often get asked about. And we'll be looking at the pros and cons of each. Okay?
Great.
Perfect. Now, something that I want to say first off before we get started is if you have a particular structure and you're thinking about changing structures, or you're thinking about it, it's very important to go and see your accountant, your bookkeeper, talk about your individual situation. Don't just go willy-nilly and make changes based on just the information you have, because although the information we're giving you is very relevant, it may not suit every particular situation. So we want to be looking at all situations. So when an accountant or a bookkeeper does help you, and more so a tax agent helps you to set this up for you, they'll be asking you many more questions, not just talking about the pros and cons as we are. Okay? But, you know, being educated and having information, I say, is very important. And information is and knowledge is gold. So let's go ahead with that. All right?
Absolutely. We need to make informed decisions, and this kind of information that you'll be sharing with us today will allow us and enable us to do that. So
perfect. So so the first kind of structure is the sole trader. Let's just take an example. Let's say that you decide, hey, you know what? I'll have my own business. Okay, I'll have a business. What does that mean? What does that mean? As you can register your business as a sole trader or as a company. So what does registering your business mean? Okay, so first of all, you have a business name and you have an ABN number, okay? When you decide to start up trading and providing services, you have to have an ABN number. Very important, because it's basically letting the government know that you are providing services under a particular structure, be that sole trader or company. So now getting your ABN is pretty easy and doesn't cost at all. If an agent does it for you and they know exactly where to go, of course, you'll be saving time and money, so they'll be charging you for that. But when you register for an ABN, you'll be asked questions like, what type of structure do you have, and who is responsible for the debts, or for who's the owner of that particular entity. So the entity that we have as a sole trader is basically you saying, I will provide the services as me. Okay, I'm the entity. So you have a choice on whether you want to register a business name or you want to trade under your own name, because as a sole trader, you can trade under your own name. You don't need a business name. However, go on. What?
I was just going to say, but it's really important either way, you need to register your name or the business name you want.
Exactly.
You do have to register this, because if somebody else is already using that name, unfortunately, you can't use it.
Yeah, that's right. So if it's your own personal name, obviously when you're applying for your ABN, it'll go under your name. But
Correct.
if you want a business name, and why do people have business names? Maybe I don't want to be called just Sarah Eldridge. I want to have my services being recognized as Trinity Bookkeeping Services. So that is my business name. Okay.
Correct.
So to register that business name, there is a cost. So it's about $37 for a couple of years. It's about $87. So that you register, and agent can help you with that, or you can do that online yourself. So first of all, you've got to register whichever entity with the government in one way or the other. One,
Correct.
you register yourself with your ABN, or two, you register as a company, and that company needs to have an ABN as well, because every business must have a Australian business number, and that is what identifies that entity against that business number. Yeah?
Correct. Super simple. Yeah.
It's rather simple. So a sole trader, what does it mean to be a sole trader, and what are the things you're looking at when you decide which entity that you're going to choose? Firstly and foremost, you're looking at your tax obligations and liabilities. Okay?
Definitely.
What does that mean? As a sole trader, as you as an individual, it's going to be you who are taxed. All right. So regardless of the companies, what companies are doing and how much they're getting taxed, we're going to get taxed based on the income, the taxable income that we make. So let's say as a sole trader, you might have a job and you might be working for yourself as well. And you have a company business, not a company, a business name that you're registering under. So at the end of the financial year, when it comes time to do your tax returns, the agent is going to look at how much money you've made from your job, and also what is your taxable income from your business where you're providing the services under the particular ABN number. And together you'll be taxed on where in the individual tax rates you sit. So let's just go through separately how you get taxed as an individual. As an individual, you have different company tax rates, right? So each one of these tax rates, so under 18,000, you don't get taxed. Then there is the next threshold that you get taxed on, and so forth. So depending on your taxable income, the first 18,000 is tax-free, and so forth, right? So when you are a sole trader, it's you as the person who will be finalizing their tax returns. So their tax returns will include anything from the sole trader business entity and your own other takings from jobs or so on. Not everybody has another job. They might just be sole traders, and so it would be based on their final bottom numbers.
Okay.
Yeah, so that's about tax obligations. With a company, on the other hand, the company is taxed at 27.5% tax rate for any of the income or profits they make. So that is when you first get started in a business, obviously you're not going to make very much. Well, most of the micro businesses don't make very much. So there might be a case for, hey, you know what, I'll start as a sole trader and I don't make that much money. So my first 18,000 is tax free anyway. And if I'm only making 18,000, then I'm not going to pay tax. And then the next will be on the next tier and so forth. So you might think, well, I'll just be a sole trader for now and I'll just do that. And there's a case for that, you know.
Absolutely.
But talking about tax liabilities versus the different structures, this is what we're looking at. Now, a trust, how does it work with a trust? You have a trust, but you have to have an entity that runs the trust. And that entity is a company structure that will run on behalf of the trust, will do work on behalf of, it's the entity that needs to be registered with an ABN number and so forth. All right?
Okay.
So that entity also has a certain percentage of tax that it will need to pay.
Yes.
However, if you have a trust, then there's beneficiaries within the trust, and they will be taxed at their tax rate, depending on whatever their tax rate is as an individual when they get the distributions from the trust. Okay? Yep. So that's how the tax works for all of the three different areas that we're looking at.
Okay.
So now let's look at what are the responsibilities and the personal liabilities of the person who owns the entity. So as a sole trader, you own the entity because it's under your name. The ABN is linked to you, okay? Therefore, all of the risks that you take, you're responsible for. That means that if there is an issue, your personal assets will become open for libel. Okay.
Yeah.
So obviously,
for example, if you've got a big debt that you can't pay down for any reason, and this does happen, and you are a sole trader, then you're potentially risking any investment you've got. That might be the house you live in. It might be an investment property or your stock market investments.
Yeah, it's whatever you own. Also, something to note though, if you have a company structure and you are the sole director of that company, then you are responsible to some degree, because we all have to realize we have to do the right thing by others. And if you owe someone, they can come round to you, but at least there is a layer of protection. Okay.
Yes.
There's a layer of protection. So what I encourage most businesses to do is to get insurance regardless of what structure they've got. So if you've got a sole trader structure and you're providing services, then go and look for insurance that covers you and indemnifies you for those services. Make sure that you have public liability insurance as well. Make sure
professional indemnity.
Yes.
PI and PL insurance.
That's right.
Okay. So that will then ensure that if you do run into any problems, which, it happens.
Yeah.
You've at least got some kind of safeguard to your own personal finances.
Exactly. Then I would like to just point out what happens if you have an employee.
Yes, because to employ people, we can be a sole trader, as I was 18 months 2 years ago, and then suddenly I took on an employee and things just started rolling from there, and I kept being a sole trader until my accountant pointed out to me, you're open for too much. You need to be protected. And so he suggested that I should become a company.
Okay.
Is this what you would suggest? So that's rule of thumb once you take on an employee?
Not necessarily a rule of thumb, because you do have work cover insurance as well that you would take on. It is one of the considerations that you would have. However, like I said, you've got to speak to your individual tax agent who knows your particular position. And Joe, in your position, maybe based on other information he had, personal information about you and the types of businesses you have, because you might have several, and so that would have been a consideration. But you can be a sole trader and employ staff, as long as you cover yourself with adequate work cover insurance, personal indemnity insurance, and then also your public liability insurance. So insure yourself in as many ways as you can, especially, take a calculated risk based on your situation. Get the professional advice that you need, and then make that decision. So as a company, then what happens as a company? So it is the entity there and the assets owned by the entity that then become at risk first. So let's say you have a business which is, let's say, a cafe, and you have a company structure, and in the past you purchased the building or the land on which you have your cafe, and those are all within that particular structure in your company. Then if your business is not doing well and the debtors are coming to ask for you, there is a case for those assets then need to be liquidated to pay for the debt. So that is something to think of. Nowadays, in the past, people with company structure did a lot of things. We've heard a lot in the news about, the directors, took money for themselves, and then the businesses failed. They didn't pay their super, they didn't pay their this, and then they just walked away scot-free. These are things that we can't expect to do anymore. It's first of all unethical, but also now there's the rules have, and also cases have been considered with more than just the structure. Okay.
Okay.
So personal asset protection. And then lastly, we want to look at costs. Okay.
Mm-hmm. Yeah, because there's substantial costs involved in a trust, for example, and because you've got the company and the trust, don't you? So obviously I would assume that a sole trader is the most cost-effective way to operate.
Mm-hmm. And you're right, though. Yeah, perfectly. Because usually when you go and get your tax returns done as an individual, I guess the basic cost these days is very low, like $100 you would get but that is if you just have a group certificate or, you've got PAYG. But with the sole trader structure, obviously the accountant is expecting you to show them the numbers for what your taxable income is, and it's not really going to be that difficult. However, as soon as you go into a company structure, you not only have to do your tax returns, you have to produce financial statements as well for the entity. All of that is done by the accountant. You can't just say, well, I'll just do my tax returns myself, which you can do as a sole trader. You can't do that as a company. You've got to have an agent do that for you. And then depending on which organization you go to, which accountant, what they look at. You know, the costs can range from 1,500 all the way to 3,000, depending on complexity of your structure. And you might have several. As soon as you start bringing a trust into the situation, then there's more. There's also keeping all the registrations up to date and so on. So there's secretarial costs that are involved and so on. So as a new startup, you know, you've got to consider cost, you've got to consider liability, you've got to consider efficiency. Regardless of which structure you decide to go with, it is very important to have your bookkeeping correct, because you don't have your bookkeeping done, and how are you going to know what your net position is going to be at the end of the year? How are you going to be able to produce that information to provide it to the agent who's going to be doing your tax returns, or as a sole trader, if you're going to be doing it, should you? Also, when looking at all of these different structures and also looking at your bookkeeping, what costs can you and can't you include as business costs? That's another thing.
Actions.
Exactly. You can't go willy-nilly and just use all of your costs, as you know. However, all legitimate costs, you can put them through. Another thing that I haven't spoken about is GST registration.
Yes. When do we register for GST? It's a big question.
Yeah, it is a big question, and I think we might have just we touched on it initially, I think, in one of our webinars, but I'll go into a little bit more detail today.
Okay.
So, as a sole trader, some people think that, hey, I can't register for GST because I'm a sole trader. That's not true. If you have an ABN number, and as a sole trader, you would have registered your ABN number by now, then you can register for GST. Your agent can do that for you, or you can do that yourself. Okay. Now,
what level of income do you need to register for GST, and do you need to register after you've reached that level of income or before you reach that level of income?
Yeah, good questions.
Turnover, I should say, not income.
Yes, exactly. Turnover. That's how much money you get into the business, right?
Correct.
And remember, we did talk about cash basis and accrual basis. I'm not going to go in there. I'm just going to say, how much money are you getting into the business, right? So let's just take a look at the dollars for the sales that you're producing. And it's mandatory that after if you think you're going to be getting to the 75,000 limit for the year, that's the financial year, it's mandatory for you to register. So what that means is, let's say that you've gotten up to the 60,000, it might be in May, and you're thinking, okay, June, what am I going to get? So it's a decision you got to make. Should I register or shouldn't I? But if you think you're going to hit and exceed that amount, then do register. It's mandatory. If you go a little bit over that, sorry, Joe?
I was going to say, what happens if you go over it and you don't anticipate that? Is there a fine you could face? Or
I think there's a bit of grace. So if it's just a little bit over, but as soon as you hit it, you've got to register. Okay, but if you go way over, I mean, what I've found with the tax office, as much as most people do worry about it, they are pretty good with understanding individual situations. So if you do have a case for it, you can talk to them about that. But other than that, you have to do the right thing. It's us to do it. Yeah, it's ethical, and we are based on self-reporting and telling the agencies where we are.
Yeah, exactly. Now, look, this is really, really interesting, because how do we know if we think we're going to be hitting the 75K mark? You said, okay, well, it goes back to your cash basis reporting, making sure that your systems are up to date and the information we put in, remember, good information in, good information out. But then it goes back to budgeting and forecasting, another one of our seminars previously.
That's so right, actually. I wasn't even thinking about that, Joe. But
exactly.
yeah, that's...
Everything is tied together, you know, and everything that we're talking about over this series is intricately linked, actually. And you don't realise it until you actually have this conversation. Oh, it's just about when do we register for BAS? Hang on a second. How do we know? Well, our reporting and our budgeting and forecasting.
Exactly. That's right. Light bulb moment. And yeah, that's right. And so to go back to your initial question of when do we register for GST, although it's mandatory to register by the time you get to the 75K limit, it's up to you when you want to register. It's totally up to you. So you can decide, hey, you know what? I'm starting my business. I want to register for GST. That is just fine. You've got to let the tax office know that you're registering for GST, so your agent can do that. But what does that mean? Sorry?
Yeah, I was going to say, when do you start charging GST? So if you've not registered previously, then you wouldn't be putting GST on anything that you sell, any product or service. Is that correct?
Yeah, that's right. So when you register for GST, that's when you can start adding the 10% on top of your services or products. It is only when you register for GST that you can claim for costs that you've incurred that have GST, and then the tax office will refund you the amount that you've claimed. So that's something to consider. If you're purchasing a lot of items that contribute to you providing the service, and if you don't register for GST, you're not going to get that tax, the benefit from receiving, you miss out. So I've actually had and can you register backdate the registration? Well,
you probably couldn't. If I got online and did it myself, I probably couldn't. But as a BAS agent,
I'll tell you how you can do it. I have, and it's not for all businesses. I could tell you right now.
Okay.
There is one exception. You're providing a service that doesn't incur GST. So it's a medical service or it's an NDIS service.
Right.
So I have, I do the bookkeeping for NDIS providers, and none of his income includes GST, and it will never include GST. And so he can safely register it starting from 1st of July, which is what I did. He came to me in December. And we said, all right, we'll just register you from the 1st of July. And his income never has GST. So when he does his BASs, which is what I've done for him, there is a portion that says, does it include GST? Now, you have two ways to do your BAS. You can do it the long form or the simpler form. And it's good enough in the simpler form to add all of your income and then just go, boom, part of it has GST, and then you put the GST amount. It doesn't have to be the portion of the sales exactly, because some of the sales you might provide is GST free.
Correct.
Okay. So, so if your sales are GST free and will remain GST free, then you can register pre-register for GST.
Okay. That's fascinating.
Yeah, that's right. And I had another lady as well who provided some medical services that she did that for, and she didn't even realize she could get the GST back, and she was very happy. So that's good.
awesome, isn't it?
Yeah, it's really
Yes.
good.
So essentially, registering for GST, you're an extension of the tax office. So what you're doing is you're collecting GST on behalf of the government, of the ATO, and then they will give it back to you at each quarter or at the end of the financial year. So essentially, you're just an agent for collection.
Collection, exactly. And you know what, Joe? I do find though that a lot of people are like, gosh, I'm taxed so much. I have to pay tax on this and tax on that. But really, GST, you're just collecting and paying. So you shouldn't be considering GST as a tax. It's not a tax. What is a tax is the tax that you pay on your net income at the end of looking at all your expenses. So that's what, but it's just the mindset because it's called tax,
Yes.
So you just think, oh, I'm being taxed for everything. But if you get into the habit, and I'm always advocating, have a savings account and a check account, regularly put aside 10%. If you're collecting GST, yes, you're also paying, but you might as well put 10% aside into your savings every month.
And when you go to set up your business bank account, or even a bank account for a business, whether it's a personal or a business one, the banks will suggest you set up a GST account, which is just an account that you can't pay bills out of. You can transfer into and out of, and it's a really good place just so that you can put that GST money aside. And the other suggestion that I have, that I do personally for one of my businesses, and I should do for both, is that I also put super payments weekly. So I pay my staff weekly, and so the GST that I collect weekly, I put into that offset account there, just into that other little GST account. But I also put the weekly super payments that I'm collecting for the tax.
So what you're doing, and it's perfect, Joe, because what you're doing is you're saying that this is a liability that I have to pay it anyway. Why don't I save it now, so when the time comes to pay, I have the money to pay? Let's not get into that cycle of, I've got all this money. And we tend to look at the bank account and go, oh, we've got this money that we can spend. But no, you've got to really consider what's in the bank is not exactly what you've got to just splurge on. And
absolutely,
you've got to be careful that way. So please look at previous webinars for that. So we've spoken about, so the GST then. Why else would you register for GST? There's a case to be said about perception, I would say.
Yes, most definitely. So if I'm paying a business, or I'm paying for a product or service, and there's GST on it, to me, that's a sense of stability of the business. It's a solid product or service. It says to me, I can trust this.
Yeah, look, it's human perception. Should we work, using that?
No, probably not.
When someone purchases your service, you want to put the best foot forward, and obviously you want to do right by them. But if best foot forward then means the perception that they will have of you, of course, you want a beautiful website. You might be working from home, but you want a good presence. You want a good, when they think of you, you want to be thought of as an ongoing business that will not close up tomorrow. And for those reasons, if you are GST registered, what I have noticed is that people do look at it as a more legitimate business. Not that they should, but they do. So that's GST registration. Also, what other registration do we need? PAYG registration. So when you decide to employ staff, you register PAYG as well.
Absolutely, because otherwise when you run the reports, another webinar we did earlier, for that, you run the reports and your PAYG doesn't show up on your reports if you're not registered and you haven't checked the box in the system. So, very important things.
Very important. So as a sole trader, you can employ staff. As a company, you can employ staff. If you have a trust, you'll have a company that can also employ staff. Whenever you employ staff, you have to register yourself with the ATO that you have PAYG and so forth. GST, you register across the board depending on whether it's over 75 or what you choose to do. Then what about ongoing costs and paperwork?
Well, yeah, I mean, you have to take that into account, don't you? It's all part of your cash flow and all part of your budgeting. But yeah, the entities cost different things, don't they? Yeah, let's go back. What was the original question?
They do. It's about ongoing costs. So as a sole trader, you can choose to report your GST annually.
Yes.
I think it's very important, though, that you report it based on your cash flow and how you think you will look after that GST portion that you're going to be putting aside. If you put that money aside and you're really good at savings and you're not going to touch it, then go ahead and do an annual report. That way you only pay once to have the person lodge the BAS for you, because there is a cost to lodging BAS.
Absolutely.
However, what does that mean? It means you have to be really meticulous about saving your money. If you don't keep the money aside, it'll hit you like a ton of bricks at the end of the year.
Absolutely.
But if you do a quarterly report and you pay that off, it gets it out of the way. You don't need to worry about it, but there's a cost involved. Now, your tax agent might want to do the BAS reporting for you. It's not essential to just go with a tax agent. You can go with a BAS agent. We charge a lot less. We have the ability to do the same thing. So then it's a question of you looking at having a BAS agent as well as a tax agent to do work in different spheres. And both of them are your trusted advisors together.
Absolutely.
And you'd be doing that with the company as well. You'd be reporting quarterly. And
making any adjustments in the last one, as we discussed in our last month webinar. You make any adjustments that you might have miscalculated for one of the quarters, but in that fourth quarter, that's when you can kind of tally it up for what it should have been for the whole year. And also, if you're doing quarterly, see, I've been listening.
Going to ask you, did you make your adjustments for the last BAS?
I did. I made sure I ran all my reports. I added them all up, and I'm like, oh, actually, now that wasn't quite right, so I can make that adjustment here in this one. It's been really, truly so informative. I've learned so much every webinar. It's great.
Thanks, Jo. Thanks. This is I love it. I love to teach and I love to share what I know, and it gives me joy with that. Yeah. So that's great. That's great. What was I going to say? I threw you. So I always have like an Excel spreadsheet that I set out and I look at everyone's, and then I'll because it does happen that you go and you make changes.
Yes.
But after the end of the year, have you locked the date on your software so that you don't go and mistakenly put things in the previous year?
That's a good question.
So go and do that though, so that by mistake you don't put it in the previous
date.
Yeah. And you know what? It usually happens at the end of the year when you're typing in your dates and you go 2020 instead of 21, and then it sits in the previous year. But if you've got a lock on your system, you won't be doing that.
That's it. Yeah. Can we just pause for 1 second?
Yeah.
Thank you. cleaner made it down to this end. She's cleaning the toilet.
All right. We're going to finish up. Do you know that we did 40 minutes? We blabbered on for 40 minutes.
It just happened.
Okay.
Excellent. All right.
Okay, so guys, I think that about wraps up our session today. I really hope that it was informative. Please pass this webinar on to your friends, your colleagues. Please share. Sharing is loving. Is that the term? Oh, sharing is caring. So care, please share, and see you all next month.
Looking forward to it.
Yeah, and I'm looking forward to that as well. There's a lot of new things in our lives this year, so the next session will continue on with more bookkeeping tricks, tips, and things to consider. So thank you, guys.
Thank you, Sarah. Fabulous.
Fantastic.